So what type of companies, how they are able to mobilize so much money? And I understand that is profitable, right? Or this is a, let's say, high risk activity in your opinion?
So most of them are profitable, not all. You have one of the biggest and one of the fastest growing company, which is Ganfeng, Chinese company. They published the results some months ago, and it really looks terribly bad because of structural reasons. When the market was going like really bullish and being like super strong, Ganfeng made a lot of investments, and now that is slowing down, they have to mitigate what they have and to play along with it. But overall, that is more of the anecdote. Overall, your question is a very good question. How do you finance the fact that for 10 years, you basically have nothing and you have a cost? Because whenever you do a drill, at best, it costs 1 million. So you're just spending out 1 million to take some brines out and do some testing, and maybe the testing look bad, or drilling down and take some rocks, and then the rocks you find are not the rocks you want. So actually, there are two different ways that companies deal with that. The first is that they go public pretty early. Even in exploration phases, they will go to IPO and raise money on the stock market. And the stock market is pretty confident in the fact that we might be in a crunch because, again, China is controlling 90% of the value chain, so they're also controlling the cost of lithium in real time, and they have a good interest for it to not to be too high, because if it's too high, other countries can invest in it. If it's low enough, well, they keep their kind of monopoly. Again, I'm simplifying stuff, but that's the idea. So one of the routes is going public. The other thing is, if you are a car manufacturer, and you know that Europe is taking a ban on internal combustion engines in 2030, that California is doing the same, then not 2030, I'm mixing my dates, but there is a ban coming up in Europe, there's a ban coming up in California, and the ban is discussed in many places around the world. You see a lot of companies doing what Volkswagen is doing right now, which is to say, you know what, we're not really developing internal combustion engines anymore, we are switching to electric, and we are developing our electric range. Well, the problem is that when you see big maps which say that there is 40 gigafactories in building in Europe, 45 gigafactories in building in North America, that's all nice. Where does the lithium come from? One gigafactory needs roughly one lithium refinery. It's more or less a one-to-one. And you need to feed this one-to-one. And so what they do is that they go into these junior mining companies and they buy their lithium long before they even produce it. Like, they do what is called an offtake agreement, and General Motors just did that for Lithium Americas, for Thacker Pass in the USA, but General Motors has several investments. Stellantis in Europe has most of the lithium, which might one day be produced out of Germany, and so far and so on. The only car manufacturer which is not going into offtake agreements is Tesla, just because they believe that their position in the market makes them immune to getting a lithium shortage and to being wiped out of the market. But it's an investment, it's a plunge you take now. I mean, the latest move from General Motors is $1 billion. Like, really, they put $1 billion on the table. This time I'm sure it's a B. So $1 billion on the table. And in exchange of what? They have 10 years of production of the lithium site. So it might produce lithium one day, and then you get it at a controlled price and everything. Or it might never be produced, and they're probably closing the contract. But once the money is out, the money is out.